Welcome you all. Today we will discuss about the various types of speculative transactions in stock markets. We know that there exist different types of the speculative transactions in stock markets, and various types of the speculative transactions that are available in stock exchanges are explained in this section. First one is option dealing. This option refers to the right to buy or sell securities within a certain time at a certain price. This is the option dealing. That is, it refers to the right to buy or sell securities within a certain time at certain price. Right to purchase security is called call option, and right to sell security is called put option. That is, there are two options, call option and the put option. Right to purchase is termed as call option and right to sell is known as put option. When the speculator expected the price to rise, he would buy a call option. He would be able to purchase the securities at the lower price and sell it at a higher price in the future. If the price doesn't rise, he may not exercise this option. Put option is bought by those who expect a fall in share prices. That is, call option is the purchase option and sell option is the put option. Call option is done when the investor or the speculator expect a rise in price. Then put option is done when the speculator expect a fall in share prices. If it is a rise in price, expect a rise in price, there will be call option. That is, put option when a fall in, that is selling a securities. Fall in, when we expect a fall in price, we sell. When we expect a rise in price, we purchase the securities. This is the logic. This is the two options, that is call option and the put option. Second type of transaction is known as the margin trading. In this case, shares are purchased with money borrowed from the brokers. That is, shares are purchased with money borrowed from brokers. The clients open an account with the broker. He deposits cash or securities into his account and agrees to maintain the margin balance with the broker at a certain level. When the broker purchases securities, the account of the client is debited with the amount of such securities. The net debit balance is secured by the client securities lying with the broker. The net balance will be given to the margin for the client, so the customer. The next one is known as arbitrage. Arbitrage refers to the benefiting from the differences in the price of securities prevailing in two exchanges. The arbitragers, we have seen the agent as a type of member. Arbitrager would buy the securities in the market at which it is cheaper and sell it in the market in which it is costlier. When the arbitrage is done between two markets within the same country, it is known as domestic arbitrage. If it is done between the markets in different countries, it is known as foreign arbitrage. That is, there will be two types of arbitrage. One can be domestic arbitrage. That is, if the arbitrage happens within the domestic economy, it is known as domestic arbitrage. If it happens between two countries, then it is known as foreign arbitrage. For arbitrage is a situation in which the broker or the agent or the member, if the member buys from the cheaper market and sells in the higher and the dear markets. That is, he make use of the differences in price of the two securities. The next one is wash sales. Wash sales refers to the transaction in which a speculator sells a particular security from one broker and buys the same security at high price through the another broker. That is, wash sale is the transaction in which a speculator sells a particular security from one broker. That is, he sells the security from one broker in one market and buys the same security at higher price through another broker. It is a fictitious transaction. Investors are misled and they think that the market is going up and start buying. The market goes up and the speculators and brokers then sell their shares at a high profits. That is, wash sale is creates an atmosphere or creates a feeling that the market is in boom. That is, these types of the members purchases at a lower price from the brokers and they themselves sell their sell securities at lower prices from the brokers and they themselves purchases at higher prices, then automatically in the market they will be feeling that the uh, sales are happening at a higher rate and they make use of these advantages. These types of sales are known as wash sales. Then another one is cornering. Cornering refers to the situation in which an individual or group acquires major portion of the company's shares. That is, individual or the group acquires major portion of the companies. This later leads to the rigging. Rigging refers to the practice of artificially hiking the price of certain shares in the bull market. That is, artificially hikes the price of certain shares in the bull market. Then blank transfers. The transfer deed contains details of only the sellers. The details of the buyers are not mentioned. The blank transfers are now banned as they encourage evasion of income tax and stamp duty. That is, blank transfer means it includes or it contains details of the seller only, but it won't contains the details of the buyer. The buyer's identity is not revealed in such types of the blank transfers, but it is banned as it creates a situation for the evasion of income tax and stamp duty. These are the various types of the speculators. That is option dealing, and that is the right to buy or sell securities within a certain time at a certain space. Margin trading means that is shares are purchased with the borrowed money from the brokers. Then arbitrage, the making use of the price differences in the market. What sale means, they creates a feeling that the market is performing well. Cornering refers to situation individual groups acquires major shares of a company shares. Rigging refers to the practice of artificially hiking the price of certain shares. Blank transfer means it will contain the information about the seller, so only the identity of the buyers is not revealed. These types of transactions are known as blank transfers. Here, the various types of the speculative transactions are given. First one is option trading, then margin trading, then arbitraging, then wash sale, cornering, rigging, and blanket are some of the important types of speculative transactions in the stock market.